Stocks moving higher this morning after a massive sell-off hit the markets this week. Just Tuesday, a hotter than expected CPI report pushing investors to rethink their rate cut bets. For more on why that matters in the areas of the market that could continue getting hit, we've got Yahoo Finance's very own Josh Schafer here with us. Josh, what have we kind of dug into from yesterday in the areas of the market that could continue to be under pressure?
Yeah, Brett, I was just taking a look at overall Fed bets yesterday, right? It's always one of our favorite things to watch. You look at that CME Fed watch tool, you can look at the world interest rate probability on something like the Bloomberg terminal and sort of track some of these things. And what stood out to me is we're now at a place where we're basically pricing in 4 cuts. And if you guys remember this line here, we got a couple lines in there now, so it's getting a little busy on us. But we're looking at that yellow line is 213, that's yesterday. And 2 things I'd point out is the yellow line is significantly lower than the light blue line. That was October, that was before our fall rally, right? That was when we didn't think the Fed was gonna cut that much next year, but it is significantly above the pink line, which was sort of peak dovishness. Sure. That was the soft landing euphoria that we had. So we're finding ourselves somewhere in the middle, and it seems like overall market participants are relatively comfortable with that.
Yeah.
That's okay because we're at least not back to, are we even going to cut? I think people are starting to wonder if inflation's reaccelerating, but not necessarily that worried about it. And then you turn and sort of take that chart and you say, okay, what's up, what's down, right? And we've noticed yesterday, you look at something like the Russell 2000, which had been rallying over the last couple of days, took a serious hit. You can track that with something like IWM. And then you take a look at real estate, one of the top sectors over the past couple of weeks, that also got crushed. So people essentially saying, okay, if we're going to see interest rates higher for longer, what areas is that going to impact? And that's where people sold.
It's true. And then, of course, we're going to continue to get a lot of Fed speak out this week.
Right.
Austin Goolsbee already saying, if we stay restrictive too long, we'll have to worry about the employment side of our mandate. So we knew that was going to be a balancing act, even though we saw some of a reprieve in terms of wage pressures. But what do you think markets are going to make of that, given the strong reaction that we saw to the CPI report?
Yeah, I mean, right now it feels like we are in a good spot, and this is what a lot of economists were saying in reaction to the report yesterday is, okay, one CPI print didn't come in how we wanted it to, but let's not forget that the economy is still doing well, right? So even if we didn't, we ruled out March yesterday, right? If we're still talking about what people want for Fed cuts. March is pretty much out of the table. Bank of America said that. It was a nice note. They said March is gone. May could still be in play. That sort of depends on what you get from inflation. But we might have enough strength in the economy right now to last until June, right? And that's sort of what Goolsbee's talking about is, can we make it until June if we need to without having a 50 basis point cut because something in the labor market breaks. Right. That is, I think, Rochelle, yes, still the fear and something people are going to be talking about more.
Absolutely. We're going to continue to monitor those comments out from Austin Goolsbee, the President and Chief Executive Officer, as well of the Federal Reserve Bank of Chicago. He's in a moderated Q&A at the Council on Foreign Relations today here.